That interview with Secretary Mnuchin was the talk among investors. After all, it's the expectation of tax reform and infrastructure spending that has helped lift the stock market. Well, today the Dow Jones Industrial Average closed at its 10th straight record, up 34 points to 20,810. The Nasdaq lost 25, and the S&P 500 was up just about a point. But stocks got off to a rocky start today as the market focused on just a few of the comments made by the Treasury Secretary. Bob Pisani explains.
The stock market had several problems with Mr. Mnuchin's comments. The S&P opened at a new high, but quickly gave up all of its gains and moved into negative territory early in the morning. Most importantly, bank stocks were among the weakest sectors. Traders chose to focus on Mr. Mnuchin's comment that he wanted tax reform to pass by the August recess, which many doubt could happen. There seems to be a sense that reforms will take longer than many had anticipated, with Mr. Mnuchin saying that growth would come toward the end of next year, a time period likely further out than traders anticipated. There was also some concern that Mr. Mnuchin's emphasis on middle-income tax cuts first meant that corporate tax cuts may not be as great as anticipated. Tech and industrial stocks, which would be big beneficiary of tax cuts, were mostly weaker on the day. But traders really raised their eyebrows on Mr. Mnuchin's acknowledgement that the stock market rally has been a report card on the Trump administration, implying that the markets have given the president essentially an A. Now, this is an extraordinary claim for a Treasury secretary, which have been historically neutral on markets, particularly something as sensitive as stocks and the dollar. It is also a very dangerous game to be playing, since if you live by the stock market, you can die by the stock market. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.